This is Ken Lake with MAC's Technical Market Update for Friday, February 17th. I'm going to start with March corn. I would say that for the exact detail, what I'm going to lay out here this afternoon, visit our website and look at the weekly newsletter at mishag.com for those details. But in March corn, 2 days lower here, closed right at support at 367. So 2 days down don't mean that we're going to continue to go lower. Would expect this support to closely be held here yet. It's still a little earlier in the seasonal period that I think we can maintain this level. The only thing wrong with saying that is that our momentum indicators are in a full sell-off here and only mid-range and have quite some ways to go before we get in oversold territory. With the Monday holiday coming up with no trade on Monday, one might expect a little volatility on Tuesday, so we would hope that support would be held here. We've maintained the idea that old crop corn supplies should be sold off in these rallies, and we still maintain that idea. The close above the 200 or the trade above the 200-day moving average lately, though, has opened our ideas up that we could still trade this 50% retracement line at 387. So those of you looking to either sell the carry into market or sell old crop stocks versus the March contract could use 380 to 387 as your target. Over in the D's corn, we've maintained for quite some time that 2017 hedges should be placed above 390. We traded 403 and a tick this week. Of course, closed lower for a couple of days here. So support is right here at the 20-day moving average, 395. For those of you who have gotten hedges off, we're going to use 405 to 410 as a target. But we're really a bit skeptical as to whether we're going to trade that high or not. One of the things that the idea hinges upon it would be planning intentions with crop budgets for corn and soybeans basically on par now that inputs have dropped. We don't think we're going to see the big dramatic drop in 2017 corn seedings as we once thought we would see. Therefore, corn farmers will likely plant the corn this spring, and that may put the top in the market here pretty quickly. So that bears watching. Over in March soybeans, there's some downside risk here. We broke a couple of our support levels here. We broke the 1032 support, so 1018 is our next target lower. Stochastics or other momentum indicators about halfway sold off here, so there's some downside risk yet in old crop soybeans. For the most part, our customers have been pretty aggressive sellers of old crop soybeans. Would not, if that's the case, in your case, I would not panic and sell additional old crop stocks here, but wait to see what happens. We've got some South American weather developments that could help us out, namely heavy rains and floods in their harvesting areas, so we'll watch that to see how that turns out. November soybeans analyzes the same way. We're in a sell-off here. We have downside risk to $10, but for the most part our customers have hedges on above $10 in the futures, up to 1043, so we're going to wait to make additional sales there. Really only got one comment in regards to wheat, both old crop and new crop. I mean, clearly we've put the lows in back in December. We kind of thought that we had our lows in maybe right after harvest time in this 410 range, and we ended up trading below $4. But again, looks like that's the long-term low. Seedings are at the lowest in 50 years. This market should react somewhat similar to what it would if it was a short crop year. That is, we would tend to put our highs in at harvest time rather than lower at harvest time. Now, old crop stocks are ample, and so there's plenty of cash grain out there to lay off against any rally. So these rallies will be short and small, but long term, this price probably burns a little higher until it becomes clearer as to what U.S. farmers will seed this fall. So watch this 200-day moving average in the March and the July. That'll be our support and resistance area. Old crop wheat holders, if you're paying commercial DP charges to hold wheat, there's no reason to do that any longer. We would sell this rally. We don't think that further futures improvement will pay for the storage charges, so that wheat should be sold. If you've got wheat on the farm, just be very sensitive to infestation problems that can happen after spring warm-up. a lot of customers have wheat and tell me they're going to sell the carry, but they have to be absolutely sure they're going to be able to meet the quality standards of a processor in order to make that carry work for them. Otherwise, it's going to be a complete disaster. You should work with one of our merchants in that regard to make sure that we have a home for that wheat, and that and we can give you ideas on maintaining quality as well.